Good afternoon. This is James with 77 Financial Group. You're listening to 15 Minutes of Finance, where in the next 15 minutes, I bet I can get you excited about investing. Let's do it. All right. Happy Friday, everybody. We are back at it again with another 15 minutes. We have had a week, everybody. It's honestly, we got tariff talk. We got wars going on. We got earnings reports. We got what else do we got? We got nothing's coming to mind, but it'll hit me. Okay, we had a bunch of stuff happening this week, and I'm excited to talk about it. Okay, especially because Palantir, everybody's favorite stock on this podcast, had earnings, and they were great. Well, they were. If great is an 8 or an 8.5, this was a 7.9. Okay, it was right there. It was good. It just wasn't phenomenal. It wasn't superb, right? And that's okay. And I'm going to explain exactly why. We're going to go over a lot of things. And if you're listening today while you're driving home from work or you just have it on in the background, I am going to eventually, with video, show you guys how to look at financial statements. Okay, I will teach you how to do it in 3 minutes. Quickly pull it up and you'll be able to look at things you like, okay, or what to look for. Now, interpreting the data is going to be a little bit different, but that's what we're here for. So I'm going to show you guys how to do that in this. So if you guys have your smartphone, whenever it comes time after we read this news here, I want to show you guys Palantir's 10Q, which is essentially just their most recent financial data. Okay, and it's a whole bunch of stuff, and it looks really intimidating. Honestly, it looks like one of the worst things in the world to ever read. But what's really cool about it is it gives you all the secrets right there. It's kind of like when you take a test and you know the answers on the page, right? It's A, B, C, or D. You just have no idea which one it is, but you know it's one of those. That's how these financial statements work. There's answers. There's hidden gems in this data. And if you're able to interpret it and accumulate enough of the data, you can give it a good score, a buy rating or a sell rating or a hold rating. Anyways, we will go all over that here in a second. And guys, we had a crazy week. Let's read this news real quick. Okay, stocks closed near where they started Friday following 2 straight days of gains as investors awaited further development on tariffs. The Dow Jones Industrial Average and S&P 500 shed 0.3 and 0.1% respectively, while the tech-heavy NASDAQ Composite rose fractionally after the indexes bounced between slight gains and losses throughout the session. Stocks were coming off of a winning session on Thursday after President Donald Trump announced a trade agreement with the UK and indicated that more deals are on the way. The major indexes posted losses for the week, the first time that's happened in 3 weeks. Woohoo! The Dow fell 0.2 for the week, while the S&P 500 gave up 0.5 and the NASDAQ retreated 0.3. Whenever you hear things like down 0.3, down 0.1, those are such fractional directional changes that it's just considered a flat result, right? The market was a little changed. The market didn't go up much. The market didn't go down much. It's those, just because it went down doesn't mean it's actually down. It's just sort of like an accounting error almost in the grand scheme of things. So whenever you hear that, it doesn't mean that the trend is negative. It just means that it just happened to be flat. It's kind of how all of us investors picture it. Everybody seems to be bracing for news from highly anticipated trade talks that are scheduled for this weekend in Switzerland between the U.S. and Chinese officials. Trump said yesterday that talks could be very substantive and that tariffs on China, which currently stand at 145%, could be lowered if the discussions go well. Market participants were also keeping tabs today on remarks from several Federal Reserve officials who were speaking at various events. The Fed Policy Committee, FOMC, on Wednesday decided to leave its benchmark interest rate unchanged, much to Trump's frustration. Fed Chair Jerome Powell said that tariffs have raised the risk of higher inflation and unemployment, but that the central bank needs more data on how trade policy is affecting the economy before adjusting monetary policy. Okay, let me just interject here. I think that's fine. It is true that we need more data on how these tariffs are going to play out. Ideally, there are no tariffs by the time the Fed chair meets next. Just get these deals done. Okay, once the deals get done, it doesn't matter about anything. They'll lower rates. Trump said it himself the other day. This thing will be like a rocket. Just everything needs to happen how they ideally would, and it will be a rocket. If that doesn't happen, obviously things are going to change. So I have no problem with Fed Chair Mr. Powell taking his time with that data. Okay, where were we? Okay, mega cap stocks were mixed on Friday. Tesla shares rallied nearly 5%, sending the EV maker to its third straight week of gains. Microsoft, Apple, Amazon, and Broadcom all inched higher, while Nvidia, Alphabet, and Meta platforms were each down less than 1%. Again, when you see that less down than 1%, it's like, again, an accounting error. Maybe people took profits. Maybe people were selling options or buying. There's so many different things that could happen. It doesn't necessarily mean there's a trend there. The earnings report calendar was relatively light, but a handful of companies made big moves Friday after releasing quarterly results. Social media platform Pinterest and cybersecurity provider Cloudflare climbed 5 and 6.5% respectively, while travel booking service Expedia dropped 7% to lead S&P 500 decliners, while buy now, pay later company Affirm plunged more than 14%. Totally dislike that company. I was invested in it, and then I think they take advantage of people wanting to buy concert tickets with a loan. So I got out of that. Bitcoin continued in gaining ground after surging above $100,000 on Thursday for the first time since February. The digital currency was at $103,100 in late afternoon trading today, up from an overnight low of $101,300. Gold futures were up 0.7% at $3,330 an ounce after 2 straight days of decline, while West Texas Intermediate futures, the U.S. crude oil benchmark, rose 1.9% to 61.5 per barrel, trading near the highest level of the month after hitting a 4-year low last week. Wow, that's pretty crazy. That's a 4-year low. A lot of people aren't talking about oil prices, but that's pretty good. The yield on the 10-year Treasury note, which affects borrowing costs on all sorts of loans, notably mortgages, rose slightly at 4.38%. The U.S. dollar index, which measures the performance of the dollar against a basket of other foreign currencies, was down 0.2% at 100.42 after hitting its highest level in a month during yesterday's session. Okay, couple of things. Lots of earnings this week, right? Crazy, or a lot of movement this week. Very happy with the week, just overall from a general investment perspective. None of it really, I don't want to say none of it matters. How do I say this? The UK news was the best news of the week. It sent things soaring. Things that even had nothing to do with the UK just shot up. It made zero sense to me. But that's what's going to happen with this. And we've been talking about this for weeks now. The whispers of the winds of the tariffs. Okay. Even just a whisper or an actual deal like the one that got done will send the stock market climbing. So what my prediction is here, because we make claims and we own them, is that the second we get a China deal, let's say China's deal doesn't get done this week, but it gets done 2 weeks from now. Okay, so what is that? End of May. There'll be another deal in between there. Okay, so we'll have one more deal and then the China deal. And the second we get a second deal, a third deal. So we have UK deal, and then I'm talking there's another one, and then we'll get China's. Once that happens, we will be back to where we were or even higher. So right around 61.50. I think we were right around there at our all-time highs, give or take 50 points. That's my prediction, okay? All it's going to take is a little bit of news. And guess what? We have a lot of other countries to deal with. I just don't think China's is going to happen because we're pretty adamant about moving to India. So, again, market looks primed and ready for amazing responses to tariff news. Good tariff news, first and foremost. However, I do want to give a disclaimer. India is going to war with Pakistan. I don't know what's going on over there. We got wars in Africa. Ukraine and Russia aren't figuring it out. We got Israel and Hamas going on. The Houthis are doing weird stuff. No one even knows what's happening in South America. They're doing their own thing. I'm sure there's wars going on over there. There's a lot of stuff that could just trigger a really bad event. And so one thing that I am cautionary and looking for is if the India-Pakistan thing does escalate, that will be concerning, especially in my head, because I remember there's a paper, and you could Google this right now, 2019 white paper on Pakistan versus India nuclear war. And it basically breaks down, and they actually said in 2025, which is crazy prediction. But they broke down how that could happen and how they could use these tactical nukes. Now, nukes aren't, it's not the same as it was with Nagasaki and Hiroshima. These nukes are targeted. So you could do like 10 nukes on 10 different military facilities. Those will be extremely devastating, but it's not going to be, it won't have the fallout that the nukes did from Japan, just because these are targeted nuclear weapons. Now, if they do 20 of them or 30 of them, then yeah, we're going to have devastation across the world. But my concern is that both countries are saying they're defending themselves from the other. The U.S. is going to back India. That's where we want to take all of our Chinese manufacturing business to anyways. So we're going to back India. And then China's going to back Pakistan. And so is probably, well, Russia might not get involved, but Turkey's definitely going to back Pakistan. Okay, so now we have an actual, we have the big dogs involved. Okay, so it's the medium countries that concern me, the Indians and the India and Pakistans. If that happens, then the allies, the big dog allies, are going to be expected to have either a financial say or an actual physical say, like hey, boots on the ground, we need your weaponry, etc., etc. So if that happens, I'm going to have a much more cautionary tale for us as investors, and I would definitely take some profits off of some of my clients' assets. Now, if that doesn't happen, that doesn't happen. But I definitely could see that being an absolute just biggest bump in the road to people making money during all this tariff talk. So that's the one hesitancy I wanted to bring up. Okay, we've got 3 minutes left. Okay, if you are on your phone, and guys, I promise you, we are moving to video. Okay, we are moving to video podcast. You will eventually be able to see me and Brandon's beautiful faces, and I mean that as in Brandon's beautiful face, right? You're going to have to suffer and deal with me, but I'm going to show you guys things on the screen as I'm doing them. And so I'll be able to actually pull up a financial statement for you. But for now, because I said we'd talk about Palantir, I do want to bring this up. So I am in my iPhone apps page, or my iPhone stocks app. So you just go to stocks. So literally the app is called stocks. I'm going to type in PLTR. Okay, the first one will be Palantir Technologies. You should see a graph. Underneath the graph, you should see words open, high, low. Right beneath that should be a blue or a purple sentence saying more data from Yahoo Finance. We're going to click on that. Okay, we're going to go all the way down. We're going to go to financial. So you're going to go to that third tab. And then all the way down, you should see a holders square. And then above that is another square called events. And then you should see a May 5th, 2025 10Q periodic financial reports. We're going to click that. And then you're going to have right here the Form 10Q, the most beautiful thing a company can give you. Okay, so last week we talked about how all of this data, PE ratio, earnings per share, it is old information while also using a daily updated stock price, which makes it inferior, out of date, etc. So let me explain that to you. So when you go to this, you look at this 10Q, it's going to look extremely intimidating. Okay, I wrote down some pages I want us to go to. So we're going to go to page 28. Page 28. So if you're actually doing this, it can be a very excellent exercise for you. Okay, 29. So page 29 is everything that I would need, because I already know so much about Palantir, to look at this and make an assessment. So you'll notice it says 2025 and 2024. That number is for the first 3 months of this year versus the first 3 months of last year. I think it's a 39% year over year increase, I think is what it was. Did I take a screenshot of it? Yeah. Palantir has a 39% year over year increase from 338 million to $855,000. Unbelievable that revenue growth occurred. Okay, now you will look at the gross margin ratio. it's 80. It used to be 82. So that's gone down a little bit. The reason for that is because they're doing a lot of things with this money. Okay. So it's not just going straight into net income. It's not like play money, like how you think of like Apple, how they just have tons and tons of investment money because they've just saved all of that over time. That's not what Palantir is doing. They're in the growth stages. They're reinvesting pretty much everything. Okay, so that gross margin of 80 is still extremely elite. And I bet next year or next quarters it'll be over 80, 82. I bet it'll be like 83 is my guess. But the really big value of looking at this is you're able to see the percentage quarter over quarter growth. Okay, and the big thing is going to be sales and net income. And you're going to be able to see net income. Here, let's look at it. Net income. Unbelievable. Net income of 2024 was 106,071,710,000. I think would be how that is written. Sorry, if you look at these are done in thousandths, so you have to do a little bit of math just by looking at them. But the net income for 2025 was 217,717,000. So that increase it's almost double. If it effectively is double. Okay. The other thing about this is it tells you how much cash they have. How much debt does this company have? Guess what? The company has zero debt. Guess how much cash they have? Literal treasuries and cash on hand, $5 billion. Okay. That's what this statement tells me, and I get excited about that. There are tons and tons of analysts and people out there that would tell you the PE ratio is too high. And again, when I talk about Palantir, I talk about these stocks, and I'm looking over this financial statement, I feel like I'm pointing a finger. Have you guys ever heard that saying that like every time you point a finger, there's three more pointing back at you? Very true. Very true. So I could get super excited about 5, 6, 7 things, and one person could be pointing back at me. It's one of my fingers essentially as I'm pointing, and they'd be like, well, what about the PE ratio? Okay, well, what about the fact that their business is mostly government contracts? Well, guess what grew by 55% this last quarter? Their corporate business. Okay, their corporate contracts. This company is growing in every single capacity that you would want a company to grow during a time in which other companies in the S&P 500 are struggling. Okay, this company is supposed to have a beta of 2.5. Well, let me actually look at what it is, because I'm sure it's significantly higher. Okay, why doesn't it? There you go. 2.68 is the beta. And, excuse me, looking at this, it's very easy for me to say, okay, I see why people don't want to invest in this company when you just look at the numbers. Okay, but when you hear the story, and again, I'm just using Palantir, I could make the same argument for HIMS, NVIDIA, AT&T. It was SoundHound before a couple of things changed. Still like SoundHound, but it's just I'm not going to run that name into the heavens here. But when I see a company, I don't just let one or two things distract me. Okay, because guess what happened before earnings came out this last Monday? On Friday of last week, our last episode, the PE ratio for Palantir was 658. Okay, earnings per share was 0.4, I think. Well, earnings per share was now 0.9. Okay, so earnings per share more than doubled, and our PE ratio was cut by over 150. It's like 510 or something now. I'd have to go do the actual math. I did it yesterday, but I forgot it. It's in the early 500s. So everything is going and trending in the right direction. So why would someone look at a company like this and say it's not good based upon the PE ratio? It's way too expensive. And I would have to agree. Okay, those metrics are not good. And for normal companies, and by normal I mean a non-trailblazing company, like if AT&T wasn't around for 150 years or however long it's been, and they just showed up into the business, I would treat them like I would. Oh, it's like there's nothing special about this phone company. They don't have any monopoly against any of the other companies. They're not doing anything more efficiently. Okay, there's nothing special about it. There's so many things to be special about Palantir. and again, I would say this about any of the companies we really like, but this is just the one that I'm using as an example. I was trying to think of a comparison for you guys, and I know I'm way over my time here, but when you're evaluating a company and you hear things like the PE ratio is too high, the valuation on this company is way too high, it's too expensive of a stock. You'll hear that. Those are kind of the same thing in a couple different ways. And really, the best visual I came up with for you guys was BMI. Okay, body mass index, I think is what it is. I remember whenever I was a college athlete way back in the day, and I was like 180 pounds. I'm 5'10", 180 pounds, maybe 10% body fat. I could dunk the basketball, and I could run a 5:30 mile. Okay, I had a BMI of like 29, 28. They told me that I was overweight, that I was fat. Okay, that's kind of what this is with this company. They're giving Palantir a BMI that's extremely high, but everything about the company says that they're fit. They're fit as a fiddle. No debt, tons of cash on hand. One of the other metrics that people will possibly judge is stock-based compensation. They are giving out hundreds of millions of dollars in stock-based compensation. That's a little weird because that increases the PE ratio. So I don't like that. But if their view is we want to hire the best talent, well, you have to have stock-based compensation, right? They got to be directly compensated for the value they bring the company. So that's honestly, you could look at it both sides of the coin with that one. But when you hear PE, you're looking at the BMI, right? It would be like looking at Charles Barkley in the 90s and being like, looking at his numbers, you'd be like, this dude is fat. He's fat and unhealthy. And then you go watch him go lead the USA Olympics in scoring and get MVP of the NBA. Like it's like Luka Doncic too. It's like, well, he's out of shape. It's like, well, is he really? Have you ever seen him play? Do you see performance? Do you see the results? Okay. So a lot of this data is BMI. And you don't really know if someone's overweight or fit, or if it's just the way the metrics are. Okay, BMI of companies is a very common issue. And what'll be funny is when you hear people talking negatively about Palantir or any stock really, they kind of focus on one or two things. And you cannot evaluate a company on one or two things. If that was true, then how come you just never invest in companies with high PEs? Right? Nobody would have ever invested in Tesla. Nobody would have ever invested in Amazon and Netflix, okay, and Apple. No one would have ever have done that. So it's just not always true. It's just a metric being used. And so I know I'm ranting now, but the PE ratio, which is the biggest gripe over Palantir, and honestly, a lot of the stocks we like, yeah, a lot of this stuff is priced in. Okay, a lot of people would say Palantir's fair market value is probably at around $70. This is trading around $115, $120 right now. That's the point. It's a company that's trailblazing, that's breaking into new AI markets, basically. So it is kind of going to have a forward-looking price, because that's the whole point. It's trying to grow. It's trailblazing. There isn't really a fair metric. And that's why it's a risk, right? You are taking a risk with this company. And I just think it's a calculated risk. That's just my opinion. Obviously, not everybody should be in this, but man, I can tell you I am. And I was when it dropped down to 60. Okay. And then I bought some more. And then whenever it went back up to 120, I said, oh, maybe I should buy more. And then I didn't. And then it dropped to 110. And then I bought a little bit more. It's like, you're buying the company and you're not buying the share price. And if you look at your investments as a share price, you're not investing, you're gambling. And we don't want to do that with your guys' money or with our money or anybody's money. We want to invest in great, great companies. So, and again, I pulled up the financial statement thinking it would be a great experience for you. But as I'm reading it, I'm like, this is way better if it was done visually. So next time I decide to do this, we'll have a camera. We'll go over the financial statement, or the 10Q, excuse me. And I'll show you guys what I like about a company, what I don't like. And we'll just break it down. And again, if the numbers were all it took, then mathematicians would be great investors. Okay. But I can tell you right now, I've seen some pension plans where PhDs and CFAs and mathematician whizzes from all over the world, and the rate of return on the pension plan is 2.4%. Okay, but guess what? Each of those people doing that 2.4%, they're making $500,000. Their bonuses are $250,000. Okay, so it is not always a simple fundamentals. What are the numbers question? That's just not how it is. And again, the proof is in the pudding. If it was that way, it'd be very easy to just create an algorithm and buy every stock. But this is why it's hard, is you have to make an assessment on what a good company is. Anyways, that's what we're trying to do. Guys, Palantir or not Palantir, there'll be another one, right? I'm going to harp on Palantir for the next 10 years. And then guess what's going to happen then? There'll be another company that I think is close to Palantir, and then another one. And I might not be right every single time. Yeah, I might not be. But we were in on Palantir at $16. Okay, and by in, I mean we were watching it, and then actually purchased right around 19, I think. Okay, so not from the beginning, but from very early on, and especially compared to where it's at now, I've been through the ups and downs of this company. And I also type in Alex Karp. Okay, just listen to what he has to say. Again, I know I'm harping on Palantir, but I could do this over 15 different companies. The ones I like and the ones I dislike. So maybe next time we'll do a company that I don't like. But all right, guys, that is it. I hope you learned something, and I hope you got excited that you know that when you hear someone harping negatively about a stock, it's not necessarily the whole story. Okay. As always, guys, invest early, invest often. We'll see you next week.